What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we did see some selling and a rise in volatility, and we do have that critical CPI data coming out tomorrow morning. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did drop 0.15%, and SPY continues to struggle at that $423 resistance level. Remember, SPY needs to close above 423 to validate the new price targets above at 425 and 430. So don't look ahead, because right now SPY is struggling at 423, and it's completely possible that 423 is that level that will trigger a correction. So until we get a break and close over 423, we have to respect that resistance level. Now, we did see some selling going into the close, but that's no surprise with tomorrow's CPI data. It really could go either way, and we have to be very patient to watch the price action at these levels. We're looking for a break and close over critical resistance at 423 to become bullish, and we're looking for a breakdown below 420 to start looking for a possible market rollover. A lot of that will depend on inflation, because there will be a lot of risk going into the middle of June. Now, if we do start closing below 420, that's going to be an early warning sign, and the most critical support level is still going to be this 20 simple moving average at 417. So your critical support levels are 420 and 417, and your critical resistance is 423. Overall, the trend is still bullish, and the price action is still closing over top of a positive sloping 5 EMA. So you don't want to get overly bearish for no reason. Wait for the price action or the trend to tell us that the market's rolling over. If we do start breaking and closing above 423, then we have a lot of upside price targets that we need to meet, and that means this could be a refreshed bull run and we're going much higher. So be patient, and we're going to know very soon exactly where this market wants to go. On the NASDAQ 100 triple Qs, we're also struggling to break over the critical resistance, and on the triple Qs, that's right at 339. We do see the triple Qs finding support at the previous resistance level, which is now a newfound support, which is a bullish price action indication. That support level is right around 336.9, and we did close right near that support level at the close. Now, we can see the 20 simple moving average is getting very close to crossing back above the 50 EMA, and that will be a bullish breakthrough, because that means all of the moving averages on the triple Qs will be stacked to the bull side. So right now the triple Qs has bullish price action, and we're very close to having the full bull trend, which overall means you're in a buy the dip market and you're looking for the next best buying opportunity. If the triple Qs break and close above 339, we're looking for the next price target above at 342.8. Your critical downside supports for the triple Qs are going to be 334.6 and 332.5, with the strongest and most critical support down here around $330. So the early warning sign for the triple Qs is a break below 334.6, and the critical support breakthrough would be a close below 330. On the Dow Jones, we dropped 0.45% today, and we did see the Dow Jones closing below the 5 and the 13 EMA. The critical support for the Dow is sitting right here at 343.75, and it does look like at this rate we are going to test that support level. We still have our critical upside resistance at 348, which we have not been able to close above. Remember, currently this is more of a double topping formation, because the closing price action has not been able to close above 348 for 2 points on this chart. So if we do come back down and close below the neckline at 336, that would be extremely bearish, and it would mean there's a lot more downside in the Dow. But don't look ahead, we still have strong support at 343.75, and the 50 EMA is likely to be tested if we do close below the 20 simple, and that level is sitting right around 339. So your critical support for the Dow is 343.75, and your critical resistance level is 348. The Dow Jones is still in a full bull trend, but we definitely see the 5 EMA rolling over and starting to go into a negative slope, which could be an early warning sign that we're losing momentum after double topping here. Again, it's not a double top until we break below the neckline. On the Russell 2000, we dropped 0.67% today, and we do see the Russell failing to close above that resistance level at 233. We started out gapping up above that level, but it wasn't able to hold, and we did see selling all day long. Look for possible support on the Russell 2000 at 230, but the stronger support level is going to be down here around $228. If 228 fails to hold up as support, look for the gap close and the 20 simple moving average support level around 223. If we do break and close above 233, that will validate our next price target, which is an all-time high price at 237. But don't look ahead, because 233 is a very strong resistance level. Also note the Russell 2000 did get the full bull trend today, and that 20 simple moving average did cross back above the 50 EMA. So this could be a buy the dip situation if we do see selling, and this is going to be a confirmation of a bull run if we don't get terrible CPI data going into tomorrow. On the Arkk ETF, we dropped 0.25% today, and we still see Arkk struggling to break back above the 50 EMA. Remember, Arkk is trying to get out of a bear market, and it won't be able to do that until it gets back above the 50 EMA for a few days in a row. So right now, the strongest resistance level is right around 114.5, and Arkk will need to close above that level for a couple of days or more to start building up a bullish trend. Right now, we are seeing the moving averages starting to cross over, but they need to get back above the 50 EMA. There will be another resistance level on Arkk around 118 if it can get back above the 50 EMA. The downside support levels are 112.68 and the 20 simple moving average around 108 to 109. On the VIX, we did rise almost 5% today, and we see the VIX closing around 17.9. Remember, the VIX is bouncing off of the support level, but we're still trading below resistance at 18.2. Right now, this is an early warning sign that we are starting to see more volatility in the market as we're near all-time highs, which could mean that we are due for that pullback, and we will see the VIX spiking. As long as the VIX stays below about 19, that's completely normal volatility. If we start to see the VIX breaking out above 20, that could mean that we're in for a deeper correction. So right now, this is completely normal VIX activity that I don't see any concerns with, but if we do start breaking out above 19 and above 20, that will be your warning sign that we could go into a deep correction. A lot of the volatility is going to play into the data coming out, so watch these critical levels very closely at 18.2 and the breakout above 19. If we come back down to support at 16.65, that will validate that we are likely going to see those brand new all-time highs. On gold, we dropped about 0.25% today, and gold is still just consolidating and going sideways around this range. We're building up a support base right around 1887, and the 20 simple moving average is just below that. If we do break below, we have one more support level at 1876, with the price target above still at 1923. On silver, we're also just consolidating around the 20 simple moving average, which is right around 27.8. We are waiting to see if silver can break out back above about 28 to try to get to the next price target at 29. Silver does have downside support right around 27.6, and a break below that would be a retest of the 50 EMA at 27. On Bitcoin, we're currently up about 9%, and Bitcoin is trading back around $36,000. We did find support at this previous low right around 31,000, and we did get a bounce off that level. But right now, you can see these Bollinger Bands are very tight and they're very contracted, and they will go through a squeeze fire in the very near future. So if Bitcoin can't close above about 37,000, it will be coming right back down to retest these support levels. Don't forget the critical support is 30,000 and 27,000. If Bitcoin can start closing back above 37,000, that will be bullish, and it does mean Bitcoin could be trying to go back into a bull run. So watch the breakout above about 37,000, and resistance levels will be at 39,000 and 43,000. If Bitcoin can start breaking and closing over some of these resistance levels, we will be getting more bullish on Bitcoin. But right now, it's still below the 20 simple moving average, and it's still in a full bear trend, and it's still in a bear market. So there's no reason to get bullish until we see the breaks and the closes over 37,000. On Amazon, we went up 0.5% today, and Amazon is starting to get that bullish breakout. We have two price action closes in a row back over the 50 EMA, and we do see Amazon trading over the support level at 32.60. We're starting to see the moving averages start trying to cross back above the 50 EMA, and we will get confirmation of the breakout if Amazon does close above about 33.35. In the event that we get a breakout, we will have resistance at 34.56, and we will have a price target above at 35.43. The downside support that's going to be the strongest is still right around 32.50, and if that level does break down, we'll be looking for a retest of 32.09. On Tesla, we dropped about 0.8% today, and Tesla is still failing to break out above this resistance trend line. Tesla tried to break out yesterday but could not do so, and today again tried to break out and failed to do so. So Tesla is still finding support right around 594, but it needs to break out soon, or it could be coming all the way back down to our support level at 546. So you have support around 594, and if that fails to hold up, we're looking for a retest of possibly a double bottom attempt right around the 540s. If Tesla does break out, you still have resistance at 626 and the 50 EMA at 640. On Apple stock, we went up 0.3% today, and Apple closed exactly on the resistance level, which is the 50 EMA right around 127. Remember, Apple is trying to break out, and it did get a breakout of the downward channel, and now we just need to see Apple start breaking and closing back above about 128. Apple does not have a bullish trend, so the price action needs to go bullish by breaking out above the 50 EMA for a couple days in a row. So watch the strong resistance level at 128, and if we can start breaking back above that level, we will have price targets above in the 130s. But don't look ahead because we need to get that confirmation breakout. The strong support levels to watch to the downside are 126 and 123. On the financials, we dropped 0.94% today and closed right on top of that 20 simple moving average. As long as the financial sector bounces from here, it could remain bullish and it could maintain the bullish trend. However, if the financial sector continues to go lower, we're looking for possible support at the 50 EMA at 36.5. On the industrial sector, we dropped over 1% today, and the industrial sector did close below the 20 simple moving average. We still have the bull trend, but the price action needs to bounce as soon as tomorrow to maintain the trend. If the industrial sector continues to head lower, look for a possible retest and support level at the 50 EMA. On the healthcare sector, we were up almost 1% today, and we did close back above that 20 simple moving average. The healthcare sector has now found support for 2 times off of that 50 EMA, and the price action is back above all the moving averages. So if the healthcare sector can continue to climb from here, we could reclaim the bullish trend and try to go back to 52-week highs. But right now, we still need another close back above the 20 simple moving average to confirm the healthcare sector is going to try to go back into a bull trend. On the energy sector, we dropped 0.63% today, and the energy sector is still trading above a positive sloping 5 EMA and still has a full bull trend. As of now, the energy sector still looks very bullish, and it does look like it could continue to go higher. So jumping back over to the S&P 500, we do have very important data coming up tomorrow morning with the CPI data, and that could influence the FOMC meeting and what the Fed has to do about inflation. So right now, be patient and watch the critical resistance level at 423. The price action is going to tell us everything we know going into tomorrow, and the data is just noise. The price action is going to tell us exactly what we need to plan for. So right now, it's a good time to be relatively neutral in the market until we see exactly where the market wants us to go. Remember, the middle of June has a lot of risk in it, and if we do see anything from now until the middle of June that could cause a sell-off, we could easily see the elevator down. Remember, the stock market takes the stairs up and the elevator down, so now is not the time to be taking on a lot of risk. We can definitely see in the sectors some bearish price action closing back below those 20 simple moving averages, and that could be an early warning sign that some of the sectors are rolling over. However, it's way too soon to know for sure, but we will know in the very near future exactly which direction this market wants to go. So be patient and stay disciplined, and you will be rewarded in the longer term. Also, remember, on the Stocks Channel Discord, I'm doing intraday updates and analysis to help you navigate this market and always stay on the right side of the trade. I'm also bringing a lot of brand new trade ideas to help you crush this market. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.